Okay, so the first basic question I will ask, which is why it is important for an individual to have a resident status, especially in UAE.
So this is very important to understand. Even before I tell you what is residential status and all, NRI living in this part of the world, which is UAE, are way different from NRIs in another part of the world. If you have to compare yourself NRI in UAE and NRI maybe in US, UK, Australia or Singapore, there is a very big difference comparatively, and it is on two fronts. Number one is NRI who is in UAE, they don't end up paying taxes over here. So there is no concept of personal income tax. So this is a very exceptional thing and ground that NRIs get the benefit who are over here. And second thing is why I say that they are very different than the other part of the world. In these countries, you stay there for a number of years, you get the PR. So you become a citizen of that country. That is when you surrender your Indian passport also. But in UAE, there is no concept of PR. What you can do is you can have a maximum period of stays, an extended stay you can have over here, but you will not get a PR over here. And that is the reason you are more connected to your mother country. So the day you don't have a visa, the first choice for you to go back would be India. And that is why your more investments also happen in India. You are very close to your mother country. So that is a way different thing. Coming to your question part, residential status. So any individual who stays outside India for more than 182 days is considered to be a non-resident Indian. So that is the key. You have to be very cautious when you are traveling very frequently. You have to see the period from 1st April to 31st March. In this financial year period, your cumulative number of days is seen for calculating the residential status.
Okay, so let's move on to the second question. What is the biggest concern for NRI in selling properties, and how it is capital gain tax calculated for NRI properties?
So primarily this got the attention in the budget 24 in July 2024 when the Honorable Finance Minister presented the budget. That is one budget which streamlined the entire concept of capital gain. It has been rationalized a lot. They have tried to structure in a way it is more simple and easy to understand. In fact, the maximum change around the capital gain taxation came in the budget to the 2024 also. The rule right now is if you are a non-resident Indian, you are selling a property in India and you have a capital gain on that, you end up paying 12.5% tax plus surcharge plus cess. Surcharge is based on your sale value, and this is the tax that you pay on the gain, okay? But the TDS part more for the NRI is actually the tax deducted at source. So India levies a TDS at a rate which is the tax rate you pay. So on the sale value you will have to pay the TDS, but your tax is actually on the gain value. So NRIs actually end up paying more, withholding more tax in India for that part. So tax you pay on the gain, TDS you pay on the sale value. So there is always at a higher rate that tax is collected in India. So of course you file your ITR, you can get the excess as a refund, or there is a procedure available where you can apply for a lower TDS certificate.
Okay. And what deduction or exemption can NRI use to save tax and capital gains?
So primarily all long-term capital gain are subject to tax, but government gives you an incentive. If you have a long-term capital gain, there are reinvestment opportunities available. Either you invest into a residential property or you put into the bond, depending on the nature of the exemption you are planning for, you get the incentive available.
Okay. And how does TDS work when NRI sell property in UAE, for example?
So actually TDS happens when this is a taxable Indian income. So NRI who is selling a property in India, TDS is at a higher rate. So it is 12.5% plus surcharge plus education cess. And this is on the sale value. Because government or the buyer doesn't know what is your gain. So they only know is what is the sale value. So TDS is prescribed on that rate, and that is the maximum rate on which you have to pay taxes.
And is there a way of lower TDS while selling property?
Yes, there is a provision available. Once you have identified the buyer, you know that okay, the sale price has been fixed upon, you can apply through a form 13 to the income tax office. This is an online form that you have to do. You have to make the details and the submissions accordingly to prove that your tax is lower than the withholding tax rate. So maybe for example, your total tax liability is just rupees 2 lakh on a total sale value of 1 crore. On being satisfied, based on the documents and details, the income tax office will issue you a lower TDS certificate of 2%. You give to the buyer. Based on that, buyer will deduct only 2% TDS then. then there is no question of excess withholding also coming in place.
So Ajay, how does this TDS work when an NRI will sell a property in India, for example?
So see, what is TDS you need to understand first. TDS means tax deducted at source. This is nothing but government says that whenever an individual has an income in India, we will withhold a component as a tax collected or tax deducted at source, and this is something which is adjusted to your final ascertained tax liability.
Okay.
So when an individual is selling a property in India, of course he will have to pay either a short-term or a long-term capital gain. So if you have like a long-term capital gain, you are selling a property in India, TDS is the rate on which you eventually pay the tax also. So जो आपका tax है, that is you pay on the gain amount, but TDS is on the sale value. So TDS for a capital gain arising on a sale of a property which is long-term in nature will be 12.5%. And this is added with surcharge, and education says surcharge is of course based on your sale value. So there are people who are a lot confused because this is where the change happened. पहले अगर हम 2024 के पहले बात करते हैं तो TDS rate was 20% that time because long-term capital gain tax rate was also 20%. Now since the tax rate has been reduced to 12.5, so TDS is also 12.5 when NRI is selling a property in India.
Okay. And what is this long-term capital gain?
See, when you are selling a property in India, you have to see a concept of period of holding. अगर आप 2 साल से ज़्यादा प्रॉपर्टी रख के बेच रहे हो, when you are selling the property after holding it for 24 months, this is classified as long-term capital gain. If you are selling within 2 years, that is less than 24 months you have holded the property and selling, it is classified as short-term capital gain. So short-term capital gain is charged as per these slab rates. Long-term capital gain is charged at a fixed rate at a 12.5. So government gives you an incentive when you are selling a property on a long-term basis.
Okay. And is there a way to lower this TDS?
So of course this is a very big worry for NRI for the very basic reason that आप जो tax pay कर रहे हो it is only on the gain, but TDS provisions apply on the sale value.
Okay.
So it will always be that your government is withholding a higher amount than your actual ascertained tax liability. So there is a provision available. Either of course number one is you claim a refund. So you will have to practically wait for period maybe 12 to 18 months to get the refund. But in case you don't want that, there is a provision available जहाँ पे एक form 13, this is an online prescribed form you make on the traces portal there. आप buyer identify करने के बाद once you have logged in the price, you have the details available, you can apply for a lower TDS certificate. In that basically you have to provide for document and details wherein you have to explain your concerned jurisdictional income tax officer, see this is my tax liability and this is my sale value. He will give you a proportionate lower TDS certificate. To give you an example, if your tax liability is just 3 lakh rupee on a sale value of 1 crore, on being satisfied, he will issue you a 3% lower TDS certificate. You give to the buyer, then buyer is deducting only 3% plus surcharge and plus cess and not 12.5% plus surcharge and cess. So this is how lower TDS works.
Okay. And let's talk about rental income. What are the tax implications for NRI earning rental income for Indian properties?
So whatever income that comes out of a rental yield is taxed as per the slab rates. So India has a progressive slab rate. If we are talking about financial year 25-26, so in India you don't pay any taxes till 4 lakh of income. And every additional 4 lakh there is a 5% increase in the tax. And if you cross the threshold of 24 lakh, and then you come into the 30% bracket. So whatever rental income you get is chargeable to tax as per the slab rates. Of course, government gives you incentive on two parts. Number one is you get the deduction for municipal taxes that you have paid. So if you have paid on the actual basis for that year, you get the deduction for that. Second deduction you get is for 30%. We call it as a standard deduction. This is basically to cover your repair, maintenance, and that cost usually you do to maintain your property. So two deductions primarily you get.
And what is the percentage of this municipal tax?
Municipal taxes is on the actual basis. So whatever you pay, you get a deduction. So if I have to give you an example, my total rental yield is 5,25,000 and I paid municipal taxes as 25,000. So you will reduce this 25,000 first. Balance is your 5 lakh. On this 5 lakh, you will get 30% deduction, which is 1,50,000. Then net is your 3,50,000. That becomes part of your total taxable income. And if like this is below the exemption limit, आप उस पे कोई भी tax pay नहीं करोगे.
Okay. And what are some common mistake which NRI makes while getting a rental income?
So any rental income that NRI is receiving, first of all, it is very important to educate the tenant over there. So TDS is applicable here also. So TDS is 30% plus 4% education cess. The tenant, if he is paying a rent to a non-resident Indian, 31.2% is the TDS that is to be done on even on a rental yield. And a lot of people are not aware. So tomorrow, if he is claiming any benefit and receives a notice in India, you are also end of the day getting into the complication. So you need to educate your tenant that TDS is to be done on that.
And what are the fine amount? Let's suppose if
So non-compliance is not on the NRI part. It is of course on the individual who is paying the rent.
Okay.
Yeah. And one more mistake I see a lot of people doing it, because if you are away from the country, it is a hassle for managing the property. So a lot of people give the power of attorney to the parents just to manage the property, find the tenants and all. I see a lot of people collecting the rent on behalf of, like, to the parents, they pay the rent. So the tenant directly pays to the father or mother who is a resident in India. So there is no hassle. But in case the individual is not the owner of the property, he doesn't have the good title over the property, he doesn't have his name on the property, that income has to be on your part. This is not your rental income of your father or mother. So be very cautious on this part. I have seen a lot of NRIs committing this mistake.
Right. Okay, and many NRIs are unsure about FEMA. So can you describe FEMA first, like what exactly it is?
So primarily your residential status or rules and regulation for an NRI are governed under the two different rule book. One is Indian income tax that governs your taxation structure, and second is FEMA, that is Foreign Exchange Management Act. This is more of a regulatory law which tells you what financial transactions you can do as an NRI in India. So where money should come, which bank account you should have, what investment opportunities you have. These are all covered under FEMA, and FEMA purely sees your intention. So like income tax will see the number of days you stay outside India, you become NRI, and then things come in. FEMA is something which you can see every particular day, or rather the day you want to do the transaction. So if your intention is that you are not coming back to India for good and you are continuing to be NRI, you are NRI as per the FEMA rule book. So like every NRI, it is mandatory for him to convert his resident saving account into NRO. That is non-resident ordinary account. So this is prescribed by the FEMA. So that is the importance of the FEMA rule book.
Okay. And what are the current rules for sales proceeding rental income abroad?
So see, if you are a non-resident Indian, your any income which is outside India is not taxable in India. But tomorrow you go back to India for good and you continue to have rental yield, or you have a capital gain. And when your status is ROR, that is resident and ordinary resident, your global income is taxable in India.
Okay. And what documents does NRI need to submit to their bank reputation?
So for remittance of funds, if you are a non-resident Indian, you are allowed to move up to 1 million USD per annum per person. So primarily if the money is in your NRO bank account and you want to bring it to the foreign country, you have two options available. Either you move it to NRE first, that is your non-resident external account, which is as good as a foreign bank account for you, which is again also in INR. So either you move from NRO to NRE, or from NRO you can bring it to your foreign bank account. The limit is 1 million USD. There are 2-3 conditions around that. Number one, whatever income or the money that you are repatriating outside should be a tax paid money. Then next is you need a form 15 CA, which is an income tax form. And third is 15 CB, which is a chartered accountant certificate. You take these to the bank and bank will give you a single page form called as A2. You fill it up, and based on that, you can move the funds from India to the foreign country.
Okay, and what is this form 60 CA?
15 CA.
Sorry, 15 CA.
Form 15 CA is an income tax form. 15 CB is a chartered accountant certified, where we as a chartered accountant certify that this is a money which is good to be remitted outside India. Based on this, banks will proceed for the remittance.
Okay. And what FEMA violation do NRI accidentally commit most often?
So most often I have seen 2-3 things. Number one is not converting your ordinary resident saving account. So FEMA requires you to convert it mandatorily to NRO. Second thing I see is a lot of NRIs have been buying agricultural land in India. So that is something which is not allowed. Only exception for an NRI to have an agricultural land in India is through inheritance. So all these are prescribed under the FEMA. So FEMA prohibits this.
Okay. Do all NRIs need a file tax return in India?
This is very important to understand. I will tell you this on two perspectives. One is on the mandatory part and second is on the voluntary part. Number one thing is government prescribes an individual to file ITR in India only when you have a taxable Indian income. एंड ऑफ द डे अगर आपको टैक्स भरना है तभी गवर्नमेंट बोलेगी आप टैक्स रिटर्न फाइल करो. देयर आर 2-3 कंडीशंस लाइक व्हेन योर इनकम इज ओवर एंड अबाउट द बेसिक एग्जेम्पशन लिमिट, दैट इज वेयर यू गेट इनटू द आईटीआर फाइलिंग पार्ट. अगर आपकी इनकम 2.5 लाख से ज़्यादा है, अगर आप ओल्ड रिजिम में जा रहे हो, देन इट इज़ मैंडेटरी फॉर यू टू फाइल आईटीआर इन इंडिया. नेक्स्ट थिंग इज इफ यू हैव एनी टैक्सेबल कैपिटल गेन. सो कैपिटल गेन इज अ फ्लैट टैक्स दैट यू पे एंड ऑफ द डे. अगर कैपिटल गेन आपने कोई भी म्यूचुअल फंड या शेयर्स बेचा है, इन दैट सिनेरियो इट इज मैंडेटरी फॉर यू टू फाइल आईटीआर इन इंडिया. Third thing is about the dividend income. So if I am a resident Indian, I have to pay tax as per the slab rates. But if I am a non-resident Indian, I have to pay tax at a rate of flat 20%. So these are the scenarios where you make taxable Indian income. When this scenario comes, it is mandatory that you file ITR in India. At times people are misunderstood or misguided that TDS has already been deducted, हमने tax तो already pay कर दिया तो हम ITR क्यों file करना है. So that is not the ultimate compliance. The government of India wants you to declare your total ascertained income and file for the taxes. So that is very important. This is I told you on the mandatory part. अब आप मेरे से पूछो कि voluntary क्यों अजय, आपने मेरे को कहा कि voluntary भी. So being an NRI, if you are not paying tax in a country like UAE, and if you are not filing tax return in India also, it is not that practically you are not filing taxes anywhere in the world. So you don't have even a single document which says you are a tax compliant citizen of our country. So especially you should be filing your taxes in India. Number one, that it creates a record. Government is not charging you anything to file taxes first of all. Government थोड़ी ना कोई पैसा ले रहा है. Of course you might hire a consultant, you will pay the professional fee. That is a different thing, but government आपको कुछ भी नहीं charge कर रहा है, and you get one document which says you are a tax compliant citizen of the country. You are substantiating your residential status, your sources of income, and you get one document which says this is good for you eventually.
Right.
So that is very important for you.
And in what situation is ITR filing is mandatory?
So ITR filing is mandatory when you have a taxable Indian income.
Okay.
अगर आपको टैक्स देना है गवर्नमेंट को, अगर बनता है आपकी इनकम पे, then it is mandatory for you to file ITR. When your income is above the basic exemption limit, यहाँ कैपिटल गेन है, यहाँ डिविडेंड इनकम है, और else if you want to carry forward the loss, like इंडिया में कॉन्सेप्ट होता है, like if you have a loss from a particular head of income, you file your ITR and you can carry forward the loss up to 8 years. In upcoming years, if you have any gain, you can set off the carry forward loss. So if you want to take this benefit, you should be filing your ITR before the due date.
Okay. And which ITR form are applicable for NRI?
So generally it is ITR 2 only.
Okay. And is it ITR 2 is most cases?
Yeah.
Okay. And can an NRI claim deduction under section 80C, 80D and other filing returns?
So practically India has two types of regimes now. One is an old regime जहाँ पे हम ये deductions claim करते थे, and there is a new tax regime now. So in case you are opting for a new tax regime, you have to forego these deductions. So an NRI has both the option. If he wants to opt for an old regime, he will get the benefit of deductions in 80C, 80D and all. But in case he is going for a new regime, there is no benefit of deductions. Government is kind of a way they are trying to abolish the old tax regime. They want people to by default migrate to new regime, and then they will discontinue the old tax regime. So you get a better tax structure as such in new tax regime.
Okay. And what are the roles of Form 67 and tax residence certificate?
So this is basically where the benefit of double tax avoidance agreement is to be taken. So if you are in a country where there is a taxes, like if you are example, you are in US levies taxes on the global income, but at the same time India will also levy taxes on the India income part. So US, if you have already paid any taxes and you want to take the benefit of that double tax avoidance agreement, in India before the ITR filing you will have to file for a Form 67 because you want to take the benefit of any tax that you have paid outside India. So no country should levy taxes twice. That is the basic objective of double tax avoidance agreement. So in India, if you want to take the benefit, you file Form 67 telling that, okay, I have paid taxes on this foreign income in this particular country. I want to take credit for that.
Okay. And what happen if NRI miss the tax filing deadline?
So basically, if you miss upon the tax filing due date, you have one more option where you can file a belated return. So 31st July is primarily the due date. This year, of course, it has been extended. But otherwise, you can still file your ITR till 31st December. In case you miss the belated return also, you cannot file your ITR. It is only for 1 year at a time you can file your ITR and claim the benefits. And अगर taxable income है और आपने miss किया, so certainly penalties are coming on your way.
And on an average, how much is the penalties?
So penalty goes even like up to 200% of the income that has escaped assessment and plus interest also.
Okay, so now let's do a quick rapid fire round. Is NRE interest taxable?
No, it is exempt.
Okay. Can NRI invest in India mutual fund and stocks?
Yes, very much he can invest.
Are gift received from parents taxable?
If it is from blood relative, exempt.
Okay. Can NRI open a new PPF accounts?
No,
Okay. Can NRI buy agricultural land?
not allowed.
What are the tax implications of foreign pension in India?
Taxable. If you are resident,
Okay. Can NRI continue to hold resident bank account?
no, it is not allowed.
Can NRI have a joint bank account with resident parents?
Yes, he can.
And can NRI get tax exemption on home loan interest?
Yes, there are benefits available.
Is dividend income taxable for NRIs?
Flat 20%.
Okay. Being a consultant company and property consultancy as well, I get lot of questions regarding properties, especially related to TDS. So, for example, if I have sold a property last year and TDS was deducted on a higher rate, so how can I claim that?
So actually TDS is very tedious for NRIs if I have to say, because the withholding tax is at a rate on which you of course pay a long term capital gain tax, but it is on a sale value. आपको टैक्स देना है सिर्फ गेन पे, बट टीडीएस आपको जो आपको डिडक्ट होगा, बायर आपको टीडीएस डिडक्ट करेगा, इट विल बी ऑन द सेल वैल्यू. इट विल ऑलवेज बी दैट अमाउंट इज विदहोल्डेड ऑन अ हायर वैल्यू. फॉर एग्जाम्पल अगर मैं आपको बताऊं कि आपने 1 करोड़ में कोई प्रॉपर्टी खरीदा है एंड 2 करोड़ में बेच रहे हो, तो आपका गेन है 1 करोड़ रुपए. इवेंचुअली आपको 1 करोड़ पे टैक्स देना है. अगर मैं 12.5% बता रहा हूँ आज का रेट है, तो टीडीएस वुड बी 12.5% प्लस ऑफ कोर्स सरचार्ज एंड सेस, बट विदहोल्डिंग टैक्स वुड बी ऑन द एंटायर 2 करोड़ वैल्यू. सो इट इज लाइक ऑलमोस्ट ट्वाइस द अमाउंट. सो यू हैव टू ऑप्शन नाउ. अगर ऑलरेडी टीडीएस जैसे डिडक्ट हो गया है आपके क्लाइंट का, तो यू विल हैव टू फाइल फॉर द इनकम टैक्स रिटर्न, and whatever excess TDS has been deducted, will be paid back to him with interest by the government. Other alternative is, if you are planning to do a transaction, you should suggest him that go for a lower TDS certificate. In that scenario, then there is no question of excess TDS being withholded by the government.
Okay. And for example, I moved to abroad in the middle of financial year, and am I still considered as NRI?
So if you're moving outside India for the employment purpose and you stay outside India for more than 183 days, you are a non-resident Indian.
What if I can the 180 days is being extended by any reason? Then what will
So if you end up staying more days in India, you are a resident, and then your global income is taxable in India. So if you are an NRI, your foreign income is exempt. If you are a resident, your global income is taxable in India. So you have to be very cautious when you are planning your travel.
Okay. And can I transfer rental income to my overseas bank account?
So primarily the rent will come only to your Indian bank account, because the tenant directly cannot pay you outside. It will come to your NRO bank account. That money you can remit from your NRO to NRE. So current income is allowed to be remitted outside India. There is a compliance that you will have to do.
Will it be a problem related to tax payable?
So anyway, this is a tax payable income. The basic condition is it should be a tax paid money. Based on that, you can remit the funds outside India.
Okay. And what happen if I inherit property while being an NRI? Is that payable?
So basically, India doesn't have the concept of inheritance tax. So capital gain will come only when you actually sell the property. So in this scenario, cost of acquisition will be maybe your parents bought this property way back. So that original price would be the cost of acquisition. Or if even it was bought before 1/4/2001, then value as on 1/4/2001 is considered as the base purchase price. And when you sell the property, that is the sale value. Difference between these two is taxable capital gain for you. तो जब तक आप प्रॉपर्टी बेचोगे नहीं, आपको कोई टैक्स नहीं पे करना है.
So Ajay, before we wrap up, what are the top tips that every NRI should follow to stay compliant and save taxes?
The number one tip which I always see to my clients is you should have your foreign bank statements made available with you. लोगों को लगता है कि ये तो हमारी फॉरेन इनकम है, हमको इंडिया में कहीं इसका जवाब नहीं देना है. दैट इज़ नॉट द सिनेरियो. सो टुमारो एनी इन्वेस्टिगेशन कम्स अप, एनी असेसमेंट कम्स अप, you will have to explain all the sources of income that you have. So it is good practice that you have your foreign bank statements, your credit card statements, the spends you have done major on the investments part. You should have all those records available, because today you are over here, you can get the bank statement, but आप कल रिटायर होकर इंडिया चले जाओगे तो आपका तो बैंक अकाउंट बंद हो गया. एंड इफ इनकम टैक्स आस्क व्हाट वाज योर सोर्स ऑफ इनकम, एक्सप्लेन योर बैंक स्टेटमेंट्स, तब तो आपके पास बैंक स्टेटमेंट है ही नहीं. that is a very practical challenge I have seen people facing. It is a good practice that you be financial disciplined, you have your records available, and try to be as updated as possible because India income tax is ever changing. तो रूल्स बहुत ज़्यादा चेंज हो रहे हैं. स्टॉप द प्रैक्टिस ऑफ आस्किंग योर फ्रेंड्स, योर पेरेंट्स और योर रिलेटिव्स. सो ऑलवेज हैव अ एक्सपर्ट कंसल्टेंट इन प्लेस because he is the right person who can guide you. So going to a someone and having a wrong consultation or maybe right consultation at wrong time, this is also having a cost. So right consultation and right time is something which is very important for a non-resident Indian.
Right. And finally, what are the some common mistake NRIs make that land them into trouble with the tax authorities?
So trying to play with the income tax is something which I have seen a lot of NRIs doing. So it is a very straightforward rule book. You have to stay compliant. You should not derive any benefit out of your, thing that you are somewhat trying to gain out of it. So stay compliant. Whatever is required by the law, you do it. Whatever is a taxable Indian income, you pay taxes on that. And this is a good thing for you then. Yeah.
Thank you, Ajay, for the information. It was nice talking to you. And I must say that you have given a lot of information and hopefully that will help our customers.
Thank you. Thank you so much. It was a delight interacting with you today. Thank you so much.
Thank you.